Well, hello everybody. Thank you for joining. This video today will have some I may have a few pretty alarming items, so I want to warn you all in advance some hard truths because the future is looking quite uncertain. And the big topic is, as well, is kind of a couple of little trading secrets and the fact that investing is hard. So let's get into it. All the top questions from the world. And thank you to the mods in chat, K18, D Tesla, Sean Donnelly, and everybody for coming. Let's get into the story. And disclaimer, of course, not financial advice, just a guy on the internet. And thank you to everybody in Patreon where the questions come from. And I will take a couple of questions at the end, despite being a little bit in transit right now. But the first question is from Jesus is Messiah. Their last post was 6 months ago. Welcome back. You mentioned this week in DCA about the wallet that bought and then sold 600 Bitcoin for a quick scalp. And they made many millions of dollars. For those of us who want to learn more based on your experience, can you suggest how we might go about learning this? As always, thank you for everything you and the team do. My pleasure. So let's get into it. As you know, I track a lot of wallets. I've got this little indicator that fires off when a movement is made. And it's kind of interesting. But this one was regarding who I call Mrs200. So we had Mr. 100 who actually bought both yesterday and today. 109 yesterday, 119 today. I tracked them all. And Mrs200 did something very interesting. So I don't know who Mrs200 is. Mrs200 could actually be in cahoots with Mr. 100 because I see them playing around with each other, kind of testing the waters differently. So it would not surprise me if they're both part of the UAE or something else. But anyway, the trade that I mentioned on DCA on Monday, thank you, Jesus, for remembering it. And sometimes I say things I don't even remember. But on 30th of January 2025, Mrs200 sold 557 Bitcoin. And she sold them at $105,882.39, which is very close to the top at the time. And I'll try to show you how they did this. Sorry, this thing is pinging. Dead. Okay, good. Now, 2 days later, or 3 days later, on the 2nd of Feb, they bought back 568 Bitcoin for $93,679.75. So, rough calculation, 557 and 106K, pulled in 59 million, and then bought them back pretty much for 553 million. So netting a quick, easy, approximately $6 million in 2 or 3 days. This is the scalp. The question is, how would you do it yourself? So there's a couple of tools that we have to do this. First of all, I think, of course, I'm saying this in jest, but perhaps Mrs200 uses the IA ATR model. But this is a 4-hour chart in the ATR. Normally, ATR is used for 6-hour, 12-hour, 24-hour. But it works very effectively on the 4-hour as well. And you can see the sell signal very clearly here at $105,000 and the buy signal at $94,000. Mrs200 sold at 105K and bought at 94K. So maybe they have this tool, I'm not sure. And they are also experimenting. But there's another way to do it as well, not just using the ATR model or IDSS, but we're going to be talking about this one a little later too, which is a little bit different. And again, when you get confluence across all indicators, it can give you a much better indication of where things are going. But this is, you could say scalping or swing trading on the 4-hour optimized trend. The sell signal did kick in at 105,000. But if you use this tool, there is no buy yet on the optimized trend. So it keeps you out of the trade. So Mrs200, if she was using this model, she would not be back in the trade. Again, we'll see what wins. We'll come back to this in a little while as well as to how people can trade effectively around this. But let's get to the second question. Oh, by the way, I forgot to mention, to make what does she make? $6 million in 2 days on the scalp, or 3 days. You need to move a lot of Bitcoin around. And they bought and sold a big bag of nearly 600 Bitcoin. So, but then again, it's a nice move, like nearly $12,000 delta in price in just 3 days. So yes, there are ways to do this, especially like if I lived in a tax-free world, I'd be doing this all day long. Anyhow, back to business. Peter N. When Tesla becomes over a $10 trillion company, isn't there a high chance that the US antitrust laws will be watching the competition and will act on Tesla? It is probable that Tesla will be divided into several companies since they have different products. How do you think this will affect shareholders? Will the shareholders get stocks in the new offspring companies? This is a brilliant question, and I like the way you think. Now, I'm going to answer this a couple of ways. First of all, tell you why I believe, yes, you are dead right. There could be potential reasons for a breakup. First of all, monopoly concerns. Tesla already makes the #1 car on the world, and it's a battery electric vehicle. So they're already in a dominant position. They're also making more profit than any other car company, with the exception of, I think, Ferrari. Now, they are also a dominant player in many sectors: AI, robotics, autonomous driving, energy storage, leading them all. And they're about to come, I mentioned in Patreon yesterday, come out with a Dojo chip as well, which is now viewed as a competition to NVIDIA. Now, this could be seen by governments as stifling competition, which could bring these antitrust bodies to break them up. Anyway, so yes, that's true. Also, they have diverse big business segments, again, vehicles, solar energy, battery, AI, robotics, etc., and might lead to some regulatory scrutiny. And also, they control all the innovation. Like if you compare a US car company to Tesla, they're not even in the same universe, never mind the same planet or league. It's very different. So yes, governments sometimes want to break up companies to foster competition and save the competition too. Now, the other thing is consumer choice. I mean, #1 car in the world, #1 leading autonomy system. They will have the #1 robot. Yes, it's looking pretty alarming. And Tesla will be the biggest company in the world and could be too big to challenge. And the US has a history of breaking up conglomerates, like I think AT&T and Standard Oil and a whole bunch of stuff. So that is where you were correct. Now, there is a silver lining, getting back to your question. If it does happen, the impact on shareholders could actually be quite positive, because typically with conglomerates, especially with conglomerates that are building businesses around 4 S-curves that are all colliding at the same time, the sum of the parts is worth more than the whole. I've done a detailed analysis that the energy storage business alone should be worth $1 trillion in market cap, easy. And shareholders, if they did break them up, shareholders would get a piece of all the different companies, which means instead of having shares in just one large conglomerate, you would own shares in several smaller companies, and you will do better, typically, which is the case. Now, there is something else, the third part of my answer to your question. When would a government not break up a company like Tesla? And this is when the country needs to embrace a company like Tesla because of other external factors. This isn't like a company that gouges customers for the price of long-distance phone calls or stuff like that. Tesla does not gouge, and they will be doing things like licensing FSD out to other companies, which will give them the same edge. The problem is the future GDP growth and the nation wealth will be fully dependent on bots and AI. If a nation does not have a leading bot AI company, then they're going to fall behind to the Chinese. And I think the US government, hopefully, they will be intelligent enough to realize this. It also impacts things like national security. Autonomy will generate huge value, self-driving vehicles, which will drive GDP growth. And yeah, most global companies cannot compete with Tesla. And China is smashing a lot of other countries. So the question is, what will happen? I think, hopefully, government is intelligent enough to embrace Elon Musk and Tesla and not break them up or shun them. We could see a very, very different future world. And remember, it's always a winner takes most. you don't want to disturb that winner, especially when the future of your economy hinges on it. Anyway, the long-winded answer to saying, don't worry about it, all good for now. Now, next question, third question from Michael A. Thank you for your passion and all your work. If you could ask Cathie Wood 3 questions and give her some NFA, what would you say to her? Well, this is this is an interesting question, and I love it. First of all, out of the gate, I have total respect and admiration for Cathie Wood. All right. And this takes me to the whole thing of investing is extremely difficult. And she's one of the few people I will actually watch on YouTube. I love her team. I love her research. She was able to peg Tesla before anybody else did with very, very accurate price predictions. So all good with me and Cathie Wood. But I do have 3 questions. And I would love the opportunity to ask her these questions. So if she's listening, which she's probably not, I'd give anything to sit down with her. And by the way, I did meet her at the We Robot event. I was just some random guy saying, "Hey, Cathie, I love your work." And she was beside 2 other people from her team. Of course, she didn't know who I was. So anyway, back to Cathie. The 3 questions I would ask. First, she has, again, I must say this with huge respect, her team, her research are second to none, in my opinion. But she does have high conviction in some names, long-term holdings, that she doesn't shake loose. So I always say keep your tap dancing shoes on. If an asset turns against you, cut it, move on. Do not get married to any asset. I think she sometimes holds some assets too long. So that would be kind of my first question. And let me give you some examples of what I'm talking about. And people watching here may remember some of these names. NVTA went to 0, okay? And it shows you how hard investing is. I'm probably going to stress that a few times today. Then another company is Nano Dimension. These are all on the ATR model. They're all zombies. It's basically has gone nowhere but down. Workhorse, nowhere but down. And these companies are interesting companies, but just didn't make it happen. ROKU, down, way off the highs. Sub-level 1, it's a zombie 2. Zoom, boom, way off the highs. And I know it was a very special time during C19, but then again, this hasn't done anything. PAC Pacific Biosciences, same thing, another zombie. And these are just some of the names that, you know, they've had a lot of conviction in, a lot of research. Maybe one day these things will come to the fore, but I don't see it. I don't see it at all. But let's get back to the other question. So that was my first thing is, why do you hold these things? And I know she's been shedding them and some have died, but she held many of them way too long, in my opinion. Second question, why do you continue to sell Tesla so early? Because you know where Tesla's going. Your price targets are through the moon. And I understand you've got your 10% rule where you can't have more than 10% allocation to one asset, but that needs to change. Okay, let your winners ride. Number 1 rule of investing. Let your winners run, whatever you want to say. But I would question it. And would they ever change that 10% rule? Because instead of selling good quality Tesla at like $250, $300 and then buying garbage, you could just hold it because you know it's going to 2,000 easy in a couple of years. So that's my second question. And third, market timing. I remember a very specific point in time. It was actually the moment I bought NVTA. And a day or so later, she sold it. And I'm like, damn, that's not good. Did I screw up? I still held it, but it ended up being an excellent trade. Along with Meta back in those glorious times. But the point is, why did she sell? And that brings about the question about her market timing. Does she feel she works better on it, or is she so deep in research that she misses some of these things? Again, utmost respect for her and her team and their work, but it brings me back to the point is investing is hard. She is top level and still, you know, can screw up. So I just want people to really take this away from today's video. Do not take investing for granted. Do not think you're going to make a 10x or 100x on one asset. That is not realistic. Investing is extremely difficult. And I spent 35 years trying to build deep processes and models around how to make it easier and to improve the odds of winning. So on that note, they would be my 3 questions for Cathie. Thank you for that great question. This is from Crypto316. You always mention that everyone needs a castle. What if you were in a situation that you could sell your entire crypto bag and pay off your mortgage and be debt-free? Would you do that if you were in that financial situation? Well, this is a great question, and believe me, I have lots of debt. I love debt. I could pay off all my debt and mortgages, but no, I keep them for many reasons. One, you've got a thing called inflation erosion of debt value. As you hear me say, 14% debasement every year, typically for fiat. What if I told you I could borrow millions at 2.5% and hold it at an interest-only 10-year fixed mortgage for 10 years? Well, the amount I have to repay is debasing at 14%. And I actually did the calculation, and those of you who were in Patreon back then, there's probably hundreds and hundreds of people that got these 2.5% interest-only mortgages for 10 years, and now they're licking their chops, as they say. Because, if you have, imagine you borrowed $1 million at 2.5% in 2022, late 2022, whatever, early 2023, you could actually buy 1 Bitcoin at that same time for maybe $15,000. Stick that aside and hold it till 2030. And then that $15,000 becomes $1 million, and then you pay off your mortgage. Okay? And you got a tax write-off for the interest you paid. This is another infinite money glitch. Okay? I don't know which country you're in or anything else, but in many places, interest is tax deductible. I also call this middle class welfare. And the other beauty of having debt is it's actually leverage. Yes, a house may not perform as good as Bitcoin, but you do buy it on leverage. So if you have a 5% down mortgage or a 10% down, 5% down is 20x leverage, 10% down is 10x leverage, etc. And the other thing is probably the most important thing. The opportunity cost is high. Now, if you hold a whole bunch of poop coins that aren't going to go anywhere but down, then it's a different situation. You should sell them and pay off your mortgage. But if you're holding assets that are going to go up, like say Tesla go from 350 to 2,000, don't pay off your mortgage. Keep that money in winning assets, because that will be extremely life-changing over the coming years. So hope this helps. That's why I love debt. Nothing wrong with it. Make sure, of course, you don't, another point, don't ever miss a payment. That can damage your credit. Don't do anything to damage your credit, because then they can jack your rates. So be very careful of that too. Next question. This is from Tanya10210. Welcome to the family. I'm a 20-year veteran teacher recently exposed to your insights. Thank you for being part of it. I'm concerned about my pension due to Wall Street's impact on teachers' pensions. Should I consider an early withdrawal to invest, or do you have an alternative suggestion? Thank you. Well, I'm not honestly too familiar with what you mean by Wall Street impact on teachers' pensions. I do know some pensions are trying to get more aggressive, take on more risk, more exposure to hedge funds and different assets because they're not making adequate return. But let's talk about, first of all, the pros and cons of what you would consider doing, and then we'll get to some conclusions. In many cases, if you do an early withdrawal and then you invest yourself, you could be exposed to a couple of things. Like the cons first, penalties, taxes, and you lose the guarantee of guaranteed income for your retirement, and market risk as well. If you bet everything that you took out on a losing asset, you could lose it all. That's the danger. But the pros is you have control over your funds, you have flexibility of investing, and you get much higher returns if you know what you're doing. I remember when I was a wage slave, there was a 401k. I could not believe, and this is a long time ago because I never did 401ks, but I remember looking at the investment options and I was like, who would invest in those mutual funds? They're complete trash. Anyway, many people are trapped, and that's why this whole game works for them. They make money selling you garbage funds that really do not perform. Now, another piece of alarming news as well I looked up the average returns for teachers' pensions over the last decade, and the average return is about 6.1%. Again, debasement is running closer to 14%. And many of these portfolios include 40% bonds. It's like they're doing the 60-40 portfolio. The bond market's been dead for years. So yeah, that's pretty sad. But if you can wrangle this stuff free with very limited penalties and taxes, you should definitely do it, because these are forecasts that I did as well for different assets. Obviously, remember to diversify. Remember, the bear markets can come as well. But these are, multiple projections. My bull projections, my sandbag multiples, and bear multiples. And these are, if you use, say, MicroStrategy, bear is only a 3.55x from where you are. That's 360% of your money in just 7 years. You're not going to make anywhere near that earning 6% per year on your pension fund. So yes, a bird in the hand is worth two in the bush. Wrangle it free, build a bag, follow my Retire On series, try to get to 300 shares of Tesla, etc. And then just sit back and relax and watch the fireworks. Hope this helps. Next question is from Ghost Protocol. That's an interesting name. And it's been a while. 10 months since you made a question, so thank you. With robotics and AI going to take a ton of jobs. This is a long one. I gotta read this. Over the next 2 to 5 years, and the currency's crashing, which is fiat, I'm trying to wrap my head around how we survive without having to sell off our bags too early that we've built up. I spent the last 5 years building Bitcoin, Tesla, Solana bags, but these are not really income-producing assets like cash flow. My net wealth is growing for sure. I missed NVTA and MicroStrategy because I focused on retirement bags of Tesla and Sol, along with Bitcoin, whole coiner status, congrats, but just couldn't get it all. Yeah, and you can never catch everything as well. Remember that, everybody. Don't try and... You're not going to be able to go to a train station and jump on all the trains at the same time. That's just not how it works. However, back to your question. My job is number 12 on the declining list of WEF new report jobs, fastest growing and declining jobs by 2030. If robots can work on each other and do far more than any human plus artificial general intelligence, will not the jobs on the fastest growing side of the report also mostly be gone by 2035, and 5 years later? Seems like at some point all the jobs get phased out and we are free from work or chores. Trying not to fall into the camp of owning nothing and being happy. As much as I hate the World Economic Forum, they may actually be right about 2030 agenda for most people who don't own assets. This is the Caste Society. And does the middle class eventually get wiped out and the ability to work hard to pull yourself out of poverty into wealth become difficult or nil? This is a profound question, and it's what I've been warning people about since late 2022. There's no doubt radical change is coming, and there's no doubt the world is not ready. And I feel awful. I feel almost like a Debbie Downer for warning people about this, but what is it? Forewarned is forearmed. Be prepared. That's why I mention it. And I think you are in very good shape because you have a focus that's way ahead of everybody else. But first of all, let's talk about the impact. For those who are not on Patreon, missed my post, I've got this series called AI Impact, which looks at all the AI stuff, how to position yourself, what's in danger, etc. But this was what you're referring to. And the WEF, as much as neither of us like them, their economists are pretty good. And they believe there will be massive changes. They believe the majority of employers are looking to pivot their workforces to be much more supported by AI and technology. And we need to be on the right side of this change, because what the WF also say, and this lady is Ida Auken, Member of Parliament of Denmark, she's telling us, like you said, welcome to 2030. I own nothing and have no privacy, and life has never been better. no offense to her, but when you hear that type of rhetoric, either they're trying to snow you or they are insane. Either one, you pick. I don't know. So, yeah, I dislike the WF, but they may be right. And this is for the majority of people. Let's talk about UBI for a second. I've been talking about how the future will be very much UBI based. Let's see where we are today. And first of all, these are dependency ratios. These are the percentage of the population that are dependent on the state or the government for survival. In the US, it's 20%. And this is old data. In 2010, nearly 49% of Americans lived in households receiving some form of government assistance. That could be Medicare, Medicaid, Social Security, other types of benefits. So it's huge. We are not far from being majority UBI. And Australia, dependency is 1 in 5, approximately 20%. And there's lots of other data out there too. But these things are definitely on the rise. Now, the good news, you have hard assets. You are way more prepared than more than 90, maybe 95% of the population. And you're aware of what's coming. So I say keep your foot on the gas. The next 3 years will be critical to escape the metrics. We now have this kind of window of opportunity that is rapidly closing. It's going to be difficult to build a bag in 2030, I believe. And I hope I'm wrong. But one thing I'm pretty good at is predicting the future. So let's hope I am wrong, but those people who are listening to this video will be able to prepare. We have to pivot ourselves from being, I heard this somewhere before, from not being kind of wage slaves, but being asset allocators. We need to build bags today to protect us in the future. And remember, it's us against everybody else. You just need to beat the others. It's like I remember a funny joke. I'm going off on a tangent here. I wish I had the image. It was from I used to have these calendars called Far Side calendars. And there was a picture of a guy. There's two guys in the jungle. They're being chased by a lion. And one guy stops and he's on the floor putting on his sneakers and tying on his running shoes, tying his shoelaces. And the other guy says, "What are you doing? The lion's coming." And he said, "I only have to outrun you." So I'll tweet that and share that post later because it's a very funny cartoon. But think of that when you come to investing. You got to beat others. And that's how you survive, is to be in that top 1%, is to beat the 99%. That's all. Next question from Why1504. I'm actually about to retire. I actually retired Monday. Woohoo! Congratulations, Why1504. With your help, my portfolio has exploded over the last 3 years. Bitcoin, MicroStrategy, Tesla, Sol, with a whole bunch of allocations, 33% Bitcoin, 26% MicroStrategy, 28% Tesla, 12% Sol, and there's a bunch of small stuff. This year, I plan to liquidate a fair amount of the above, and some Sol and MicroStrategy, and get rid of all the junk. Where do I move? More Tesla, Bitcoin, cash, something else? Thank you. Well, you probably saw my post on Patreon this morning regarding Jeff Booth foreseeing a supply crunch for Bitcoin, and then things will kick off. And that's why I'm still very bullish on Bitcoin. But remember this, a couple of things. I did share this crude little chart last week. I do believe, Tesla's really weak right now, but remember, we went from 106 to 485, back down to about 365. It's volatile. However, I do believe towards the end of this year, there's going to be a lot of tailwinds hitting and the world will realize what it is. And that's why we need to get into that rotation before it actually happens. Now, the orange is crypto. I don't know which ones, but I believe we will get a mini alt season with winning asset, singular. And I do believe Bitcoin will go higher in 2025, despite the weakness right now. And the red is Tesla, and I hope it languishes as long as we possibly can. I want crypto to kick off first, and then we will prepare for the rotation. Now, what we rotate into, where we take profits, I made it very clear. Shed the miners first. All the garbage, as you say, get rid of it. Sell early. Do not be a bag holder. There's nothing wrong with selling early and taking profits. But there's a couple of things that I want to bear in mind. One, remember the interim step. Don't feel that you have to swap, like take profit on, say, MicroStrategy and then buy something immediately. You can actually take profit and sit on cash and then layer in at favorable entry points into Tesla or other assets. If a supply crunch comes for Bitcoin, that could make it very appealing. But if a supply crunch does hit, we will see things go up very fast because risk happens fast. You may only have a day or so, a couple of days to react. So bear that in mind. And back to the red line, which is Tesla. The tailwinds that are coming late in 2025 will be like nothing we've ever seen before. Elon Musk said the same thing. We'll have unsupervised FSD, Model 2 sub $30,000 car. Robotaxis will be launching in Austin in June 2025. I hope it's a small launch and it takes the markets time to digest. Optimus robot factory will be working in factories, doing stuff, doing productive work, and there'll be thousands of them. There'll be new factories, maybe another third Megapack factory and others. And the Megapack for energy in Shanghai is going live, and FSD license will uptick. I know people kind of are critical of FSD. I literally stopped driving about a month ago, and my car takes me everywhere. And I have lost trust in myself. It's kind of a weird feeling when you no longer feel competent, when you think a car can drive better than you. And I consider myself a very good driver. But that's where we are. It's happening. And I do believe 2025 will have these tailwinds and will drive the price. I just hope it happens slower than we expect. Next question from Peter V. Hello, James. I was wondering if you can make it possible in the products of InvestAnswers to buy only the IA optimized trend, so you don't have to get all the other products if you just want this tool. Good question. So first of all, optimized trend, what is it? We did show it earlier on with the scalping, and it would have kept you out of Bitcoin. It would have sold you at the top, but it kept you out. And this is unlike any traditional model. I burnt more brain cells developing this with the team than any other model in my life. It was extremely difficult, and it does not rely on lagging indicators, but it looks at the past, and it has multiple models and predictive algos in it that tailor it to every single asset. So no two are alike, and it really helps you not only detect emerging trends, but also direction of the asset, not the broader market, just the asset. So it is a unique one, and we have people that actually trade on just this alone. So the two hacks you can look at, first of all, IDSS includes it as part of the four-legged stool, the confidence model, trend model with a backtest, confidence model with a backtest, mean reversion with a backtest, and optimized trend, which actually doesn't need a backtest because it's already optimized. But we also bundled optimized trend with PTOS, which is pair trading on steroids, which is a very low price, so people get it that way too. And many PTOS users I've heard from in the community just use that alone to trade. And as a reminder, this was the chart I showed earlier with Bitcoin on the 4-hour optimized trend. It's optimized for the 4-hour as well. But this would have kept you out of the trade so far. If you want more rapid signals, if you can trade more frequently, take it to an hour or 15 minutes or 5 minutes. If you want to day trade using it, you can do that. It works across any time frame, weeks, months, days, any hours. It's completely optimized. So check it out. Next question is from Teresa. I've been listening to you for years, and I finally joined Patreon last year. Woohoo! Wish it had been sooner. My 9-year-old recognized your voice and loves to say, brought to you by coffee. Well, I did a lot of coffee today. I'm actually on the pu'er Chinese tea right now, but thank you. Can you give us an update on GNS Group? It sounds great when you read their press releases, but the stock price has been massacred. Is it just the market not understanding the MicroStrategy playbook, or not realizing that dilution to buy Bitcoin is actually accretive? Thank you for all your work. Good question. I haven't had a look at this one in a while. I remember when I think they started buying Bitcoin in the 12th of November. But I put together a little Arb model just to show you what it's like. This is the amount of Bitcoin they own, 420 for the most recent records I could find. The enterprise value before they bought Bitcoin was 11.6 million, and they have 1.21 million cash on hand. So when you break all that down, the premium on their Bitcoin bag is only 9.38%, which is very low. Basically, they're trading at the value of their Bitcoin almost. So, because they did have a company that was worth 11.6 million. Remember, it's a very small company, and small companies are very risky. So that's the first part. And second part is this. This is the cruder model, but this is what we call the HODL model. And basically, how much Bitcoin do you get for every dollar you invest? And you can see here, gains is number 2 on the list now. You get 69 cents of Bitcoin for every dollar you invest. The winner is Marathon, 75 cents right now. Samler is number 3, 65 cents. MicroStrategy number 4, 55 cents, etc., etc. And you can see Tesla at the bottom. For every dollar you invest in Tesla, you get 0.0008 Bitcoin. So not much. And the NAV premium is there as well. But the NAV premium is just based on their HODL over market cap. Very simple. And between those two models, you get a feel. But there's some weird stuff that has happened with this company, GNS Group. And I think, Yes, GNS Group. I just want to talk about a couple of things that are very strange. First of all, weird split action. I've been watching stock splits and I'm trading stock splits for more than 30 years. I've never seen a company split 1 for 10 and then split again 1,121 for 1,000 shares. So that's really weird, really confusing, and that is strange. Also, the company has a colorful history. If you go back in time, and shout out to the community as well, there has been apparently accusations of stock manipulation and dilution. The GNS CEO allegedly used accusations of short seller manipulation to inflate the stock price and then dilute it through multiple offerings. So we see some of the dilution probably happening to get more money, to buy more Bitcoin. Also, it's been extremely volatile. It's old even before, way before their Bitcoin strategy. In Feb 2023, there was legal proceedings against some illegal trading impacting its shares. In 2023 as well, New York Stock Exchange issued a warning for inconsistent public disclosures on Twitter. So they got smacked on the hand, and despite a revenue increase to 23 million, the value has plummeted a lot, and there's concerns of delisting. So we'll see. And this could be one of the things that companies maybe sometimes do when they find out, okay, their business is not growing and they need to deploy their cash and they need to try pump their stock. They follow the MicroStrategy playbook. Maybe this is another one of those examples. But right now, when you look at it on this perspective, as long as the company is legit, I don't know if the CEO is legit. I haven't taken the time to profile the executives. It's too small a company. But they are pretty good value for money. Maybe it'll pop, especially if Bitcoin pops back to 105, 110K. This thing should get better, because if this NAV premium was to fall, like to parity, then it would be a no-brainer to invest in. And their debt as well, their debt I think is about 5 million. So it's not that much considering their market cap. So that's where we are with that. But I think you might look very carefully at the stock splits here. Back in 16th of August 2024, in January 2025, that stock split in January, I just don't understand why somebody would do something so confusing. Anyway, beyond me. I hope that helps. And final fun piece of news, we sponsored Amber the Snow Macaque, and apparently they're called snow monkeys because they live in Japan where snow covers the ground during winter. So DCA will be tomorrow morning. We have Marty moderating. That's always fun to see his insights. Actually, CTO. CTO is moderating. Sorry, my bad. CTO will be moderating tomorrow. And thank you all for coming. I'm going to do some live questions now. And I hope everybody can still hear me. Thank you again to the mods, Sean Donnelly, KA, T&D Tesla, and all the wonderful people here. And Beatty McGee. Who else did I miss? Anyway, let's get into it. First question is from Doc Intern. Yay, hey Doc. Your NFA thoughts on trading in 401k between MicroStrategy and IBIT using Arb Cloud until the MicroStrategy Q1 earnings call. And if then MicroStrategy starts rising, then May, October slowly convert up to 3% into Tesla. Gracias. It's a great idea. I've been kind of thinking about that and doing that a lot myself with the Arb Cloud as well. And you can do it tax-free all day long in an IRA, 401k, etc. Yep, do it. The Arb Cloud is the simplest tool and absolute moneymaker. Go for it. Regarding earnings, there are some things that I'm digging into regarding the new FASB accounting rules and the impact on MicroStrategy, because it is a bit of a double-edged sword. But I'll dig more into that and update everybody within Patreon as well. And of course, share my moves as well. From Devin Kawapua, hope I got that right. What do you think the new FASB rules will do to MicroStrategy share price? Another everybody's MicroStrategy questions. It's a double-edged sword. The impact is uncertain, but it'll be both good and bad. So, for example, on the unrealized capital gains, marking to market for Bitcoin price could explode earnings. And at the same time, the CAMT could impact the stock as well. Either way, Michael Saylor is no dummy. Him and his team have, of course, considered this. We'll see where it goes. And it could be a reason why they are not converting to the new FASB accounting rule. And if they do or not as well. We'll see. But they know what they're doing. Viraj Darbar. Guys, why is James saying in his 2032 model that MicroStrategy will grow less than Bitcoin in all three cases? Then what is the point of buying MicroStrategy now? Great question, Viraj, and well spotted. So this assumes that the NAV premium will go to zero by the year 2030, 2032. By then, we will be out of the trade. And I could be wrong. If they get into a whole bunch of Bitcoin financial services and generate other ways of using financial jiu-jitsu to make a lot of money on Bitcoin, that's also possible. But remember, I am extremely risk-averse, I'm extremely prudent, and I always sandbag everything. So the reason the multiples on MicroStrategy are so low out to 2032 is I assume NAV premium will go to zero over time. However, they will not now. And I did a video a couple of weeks ago regarding a weird supply crunch theory, that if you imagine all of the Bitcoin leaves the exchanges and there's a supply crunch, guess what? There will only be one on-ramp to Bitcoin, and that'll be MicroStrategy. If you ain't first, you're last. And that could be a huge afterburner for the stock. And that's what I'm waiting for. And we'll see if we get that supply crunch. And we'll see if we even get another bear market. A lot of people think maybe not. Anyway, we'll see. We have all the data. We are armed and dangerous. We can track all of the on-chain information that we need to determine where we're going to go next and when to pivot between assets. And I want to thank everybody as well. Thank you as well to Adam Q and Glenn Joe and Super Soul Man and Forrest M and Swiper No Swiping, Andy, AC1 and BD McGee. Thank you all for putting up with me. I hopefully will be back in my little black bunker tomorrow for DCA. Thank you all. Have a great day, everybody. Love you all. Take care of each other. And, I should check the Bitcoin price before I wrap. Bitcoin 96K. It's doing nothing. So, we'll see. We'll see if we pump when Asia comes online in about 3.5 hours. Thank you all. Thank you, Piper. Thank you, T&D Tesla. LAX guy. Benny's here, too. Great to see everybody. And CNC Ireland. And, gosh, have a good night, everybody. Bye-bye.